What up, what up? It's your boy Jay Snipes. It's Notebooks to Notes, and I'm back with another video. I know. I've been MIA for about a month or two, but I've been doubling down, staying focused, and let me tell you, it's been paying off big time. So in this video, I'm going to be breaking down how I made just over $17,000 last month in 20 trading days just by trading Tesla alone. Yeah, you heard that correctly. $17,000, 20 trading days, only trading Tesla. But before we get into the video, I'm gonna need you guys to smash that like button and hit that subscribe button, as it helps me push my content to more people that may find my videos useful to them. But now that you're good with all that, let's get into the video. So we are back. As you can see here, I have on my screen pulled up. I don't know why this is saying this is about $2,000 off, but it is what it is. I'll bring you to my TD in a second. Well, with the TD, I could just show you right now. From the 3rd to the 1st, we started at about the low of $11,000. I took out some money. I went to Colorado. I went to Vail, Colorado, a little vacation type thing. So I went out there, took some money out. Had to pay for some things. So my low was about 11.5, and from 11.5, when I got back from vacation, we got right back to it. Got to stay focused, man. Got to stay consistent, and from there, it's just been an upsoar, and we ended the month December 1st at about 28,000. Every month I take out, so it's rinse and repeat. I really don't like to grow the account too much. I feel like for me, I'll just get way too greedy, so I just rinse and repeat every month. But as you can see, it was about $17,000 or maybe 16 and some change. I haven't done the math exactly, but it is what it is. Either way, it was my biggest month to date, and I'm extremely proud. This is a huge accomplishment for me. I've been working towards this, try to hit 20, but I didn't want to get too greedy. It is what it is, but it's a huge accomplishment. Been working at this for years now, so it's big to know I've been doing this consistently for the last 6 months. But then this month I blew it out the water, and there was no fear. It was strictly consistency, staying focused, and understanding, and staying in sync with the markets, and staying in sync with Tesla. And that's exactly what I did, and that's how we had a huge month last month. It was huge. So like I said, we're gonna do it again this month. This month I'm aiming for $20,000. We're not playing this month. We already hit December 1st. As you can see, we already hit December 1st. We made about 1,000 on Friday. Was in the market for about 10 minutes, and that was it. So we coming tomorrow to repeat, like I said before, and it's just gonna the results are just gonna show themselves by the end of the month, because or the hard work is going to show itself by the end of the month. So as you can see here, I'm on TradeViz, like I mentioned before. This is how I track a lot of my trades, well, all my trades, because TD Ameritrade doesn't give you an in-depth analytical view on how you're trading and what you're doing right and what you're doing wrong, what times you're trading the best, what type of volume trading, stuff like that. So I pay for the subscription over here at TradeViz, and then from there, I'm able to see an in-depth view of how I'm trading every day that I'm in the market, every trade that I take. I strongly suggest you get some type of journal so you understand what you're doing right and what you're doing wrong, and you understand the trades that you're taking. It's very, very critical. Like I mentioned in other videos and past videos, journaling your trades and understanding why you're taking trades is very, very key in becoming a consistently profitable trader. But either way, it was a huge month, my biggest month to date. As you can see, it was a 76% win rate. 44 wins on the month, 14 losses. The highest score was 30. The lowest score was 2. Average wins per day is 2.1. Average loss, so the ratio is 0.67. As you can see, the average day P&L was about $738, but most days I made about 1,000. Let's see, what else can we take from here? So we're gonna go to the weekly view, or the monthly view, sorry. And as you can see, the first of the month we already made 1,081. This was December 1st, and then last month, here we go, we can see some trades. So this is where I took a fat L, $1,200. I usually don't let myself get that negative and drawdown. Unfortunately, I kind of held a little too long and ended up losing about $1,200 together total. I guess I lost about $1,500. And from there I just haven't lost since. From there it was just kind of like a click in my head, like, okay, this is what I did wrong. I went into the trade a little too soon. It didn't match my confluences, kind of just jumped in. So I understood what I did wrong, and this is why I said it's very, very, very important to journal your trades, because you'll understand why you take certain trades and why you don't take certain trades. So I understood why I took this trade and why I lost on this trade. So I didn't blame the markets. I didn't blame, the market makers rigging the markets. I blamed myself. I understood why I got in. I understood that it just didn't match my confluence and it didn't match my trading strategy. So I went on, I moved forward and understood what I shouldn't do on my next trades. And that's exactly what happened. As you could see, it started December. It was just, it was a win. And then, we're coming back Monday. Hopefully we win that. And, every day of the week, we just go in and we try to, extract some profits from the markets. It's never a guarantee. But like I said, when you journal your trades, you understand why you don't and why you do take certain trades. And then from there, you can understand the markets a little better and understand your strategy a little better. You know what I mean? So you want to be consistently profitable month in and month out, year in and year out. You don't want to just have 1 month of profitability. Next month, you lose it all. That's not how you want to trade. You want to be able to do it month in and month out. And this is how you be able to do certain things. This is how you be able to get the freedom that you want, be able to buy the things that you want, and live the lifestyle that you want by becoming a consistently profitable trader. It's not easy. Like I tell people all the time, it's the hardest way to make easy money. But if you put your mind to it and you stay focused, like I mentioned in the start of the video, you got to double down and stay focused. You will see results. So as you can see here, I have the trades and what we've done for the last month. It was a big month, and we're aiming to do it again this month. And I'm gonna break down how and what I expect to see trading Tesla. So like I said before, I like to stay in sync with the markets. So I only trade Tesla as of right now. Some periods of time I'll just trade the SPY. And this is how I stay in sync. Yes, I'll look at other tickers. Yes, I look at QQQ. Yes, I look at Nvidia. Yes, I look at Apple. Yes, I look at other stocks. But when I day trade on a day-to-day basis, there's only one chart that I have up. I strictly trade on price action, level 2, times and sales. I have one chart up. This is the chart I use. I day trade, I scalp. Sometimes I don't really swing, but I intraday trade where, I'll start at the beginning of the day, hold it to the end of the day. But like I said, like I've just mentioned, I normally do not have more than one chart up. It's rare that I'll have two charts. I have it side by side. I may have the SPY and I'll have Tesla on the side. But for the most part, as you can see down here, I can just check the SPY and what it's doing right there and see if Tesla's correlating right there or if Tesla's doing its own thing for the day. But as you can see, I have my key levels. I had my key levels for the month already, so I kind of understood where prices breaking down from, and I understood where the prices needed to be mitigated. So as you can see, price kind of stood at 244 level, at that 244 level, and just couldn't break that 244 level for, let's see, 1 2 3 4 5 6 7 8 9 10 days. About 10 days it couldn't break that level, and then on that 10th day it finally broke that level with some strength. This is when I started getting into some calls, because I understood that when a key level is broken with some strength like that, it's more likely, I'm not saying all the time, but it's more likely or not going to hit that next key level to mitigate whatever orders were left behind from the previous drop. And that's exactly what it did. So I knew this strength, this strength right here, I knew it was going to follow up with more strength, and more than likely a measured move was going to happen. And a measured move sort of did happen, and that's when I started getting into calls, because I understood there was key levels here, and this huge institutional candlestick had a lot of orders that it was an imbalance. So there was a lot of orders that just weren't mitigated. So I knew there was going to be a mitigation there once this key level was broken, and that's exactly what it did. Now, this is when I started to understand, when it broke down at the end of the day, when it started to drop, that it was more than likely 80% of breakouts fail, that this was going to fail based on the price action, based on the daily chart. As you could see, that after it went into this level, broke this level, it immediately got rejected and immediately dropped down and closed the day at its at the bottom, at its low. So on the lower wick, that's a strong close. That's a strong bearish close. It's closed on the lower bottom. It left the top wick up here, so it's a reversal attempt, and it was a failed reversal attempt. That's why it has that long wick. So you can understand from there, that price action, you can understand, okay, the bears are coming in and that's strong. So it's usually, more than likely, it's either going to go into a trading range or start breaking down into a bearish reversal. And that's exactly what it did. As you can see here on this daily, as soon as it opened, it immediately got rejected. And this was on the 30th. And I do believe I took a huge play on that day. Let me see if we go back to, let's go back here. Yeah, I made about $976 off the open. Like I said, I usually trade off the open just because I recognize certain patterns from the day before and I understand key levels. So if I don't get something straight off the open, then I get it, you know, 10-15 minutes after, maybe 20-30 minutes. Rarity that I get it anytime after 10:30. I realized analytically that it's not as profitable after 10:30. Volume really starts to slow down, and you know the trend usually tries to find itself in the first 90 minutes of the day. So understanding that, I try to trade, you know, the beginning of the day, understanding that it's going to try to find its trend, and understanding that it's going to try to trick a lot of traders, and once it tries to trick a lot of traders, it's going to try to find its trend move. Catch that trend move, you can make a lot of money. So understanding that, I saw that on this day that it just couldn't break this key level, and it was going to drop right back into this breakout zone. More often than not, when it breaks out of a zone, 80% of breakouts fail. It goes back in to that breakout zone, and it mitigates whatever orders were there, and that's when it either goes into a trading range or it starts to break down into either a bear trend, a bear reversal, or goes back as a pullback, and it pulls back and then mitigates any orders that were left behind up here, and then from there, you'll get a bull trend, you'll get a bull run. So it's all about what you see, price action and key levels. As you can see, as it dropped down to this key level here, it immediately got eaten up. And as you can see, every time it dropped down to this key level, this key level is about 233 to about 226. Every time it came down to this level, it got immediately eaten up. So there's a lot of passive buy orders there. So a lot of passive buy orders there. That tells you a lot. So it tells you that right now, that this zone is trying to get mitigated and it's trying to catch whatever orders were up here. So this week I do expect a move up. Coming into this week, I do expect to move up to 245. I want to see a move up to 245, maybe 246 to 247, and seeing what it does there. If it can't break that zone, I definitely see a drop back down, where it now tries to break the zone of 226, 227, or 227, 226, and from there hit its bearish trend and start its reversal. So as you can see on the daily, this is a huge bull trend and a lot of buy orders at the end of the day. So knowing that there's a lot of buy orders, it tells you that right now we're at a key level. We're at a key level and there's a lot of passive buy orders. You could start buying. The chances that the next day breaks this level and drops down, it's very, very rare, but it can happen. So you know, you always have to see what price action is doing throughout the day and throughout the intraday. It's very, very crucial to mark your key levels and understand what's going on at those key levels. Just because it's a breakout doesn't mean the breakout's going to continue until a bull breakout. You got to see what prices are doing. You got to see what price action is doing. You got to see what follow through is. If you get something like this where it breaks out and then you get a bear candle, and then you get a bull candle where it breaks this level, but it barely closes on its high, you know that the follow through is just weak, and you know that it's probably not going to break this level for quite a while. And understanding that can kind of give you an idea how you want to place your trade throughout that day. So like I mentioned before, I try to catch them on the open. So understanding where key levels are on the daily will give you a better idea of how to take a trade on the open. So let me break this down for you real quick. So here's a trade. So these are all trades that I've taken. This is why all these levels are marked, because I've taken trades at all these key levels. So as you can see here, this is a key level from the pre-market and yesterday's low. So as you can see right here, yesterday's low was about 242. Try to come back up, and it did. It broke that level, but after market, and then held that level, right? So it held that level as support after market, after hours. As soon as the market opened, it dropped, right? So it dropped past this level, retraced, and immediately got rejected as a double top. So this is where you can take trades. Why? Because this level here has now been mitigated, and it tells you that the mitigation is not strong enough to push prices higher, that the bears have now given that the bulls have now given up, and the bears have now taken control. This huge bear engulfing candle tells you that the bulls are now not in control anymore, that the bears have now taken over, and that's, you know, sinkage is about to happen. And that's exactly what happened throughout the day. So this is where you can hold into the next day and understand that, okay, that now it's going to create key levels, and these key levels are more than likely going to be strong because now we're in a bear trend, right? So as you can see, this key level right here, rejected. Key level rejected. Right here, it looks like now it's starting to consolidate at this level, and it's like a magnet. This is why I said it's probably going to now mitigate any leftover orders up here. These are all leftover orders. This is unfinished business. This is where I have it. If we go on the weekly, let's hit on the weekly. It's really hard to tell on the weekly just because it's a lot of lines. You have 3 weeks where this zone has not broken, right? So this is very, very, very important. I want you guys to notice this, that this is 3 weeks in a row that this zone has tried to break and has been rejected. So there's a lot of passive bear orders. I want you guys to notice this. What I'm expecting is I want to see a break into this zone again, a break into this zone at 241. And if it's strong enough, a break into that 245, right? But if it's not strong enough to break out of that 241, 242, I want to see a pullback into that 229 area. Yes, I definitely want to see a pullback into that 229 area if it cannot break out of this zone with strength. As you can see, it's been rejected 3 weeks in a row. This means something. Even though this was a huge engulfing, a bull engulfing candle, this is a huge and even bigger engulfing bear candle. So there's a lot of passive orders that are just still there that still need to be mitigated. So if there's enough and not enough bulls, I do expect this week, or not this week, the following week, to mitigate orders back into this 229, 226 area where this huge breakout started to happen. I do expect that to happen if it cannot break out of this zone with strength. So now that you guys know this, it's up to you to place your key levels day to day and understand where you're going to place your trades. You can either swing it or you can scalp it. There's so many different ways you could play this. But like I said, you want to know what's going on. You want to stay in sync. You want to understand where your key levels are, and you want to understand how prices are reacting at these key levels. If you don't know how prices are reacting at these key levels, you won't know how to get into a trade properly, right? And you'll end up losing majority of your trades. Trust me. You need to understand how prices are reacting. It's all about price action. Price action and human emotions. You want to stay on top of what's going on. The other day, Tesla just started to boom because of the Cybertruck event, and then started to tank. So understanding things like this will give you kind of an idea why things happen like that, because a lot of people were just panicking because it just started to move out of nowhere. But if you understood a lot of investors were excited about the cyber event, then you'd understand why it started to move like that, and then you would have sold where it wanted to mitigate. It just needed to mitigate the orders at the top. It's almost just like it's all played out. It's almost like it has events at certain dates where it needs to mitigate orders, if you know what I'm trying to get to. Like it's like everything in the market is like kind of played out. You just have to really, really stay in sync to understand that. And yeah, I hope this video was insightful. Kind of gave you kind of a breakdown on how I see Tesla playing out these next couple of days. And yeah, if it was helpful, drop a like and subscribe to the channel. And yeah, comment below which you thought was helpful and what you think is going to happen in Tesla in the next couple of weeks. Because like I said, I do believe that Tesla is going to make this next mitigation move back to maybe 244 and measure this move right here. I definitely want to see a measurement of this move. So I don't know. Tell me what you think. Tell me where your key levels are. Tell me how you see prices moving. And yeah, I'll definitely get back to you guys and put my input in. But yeah, this is how I see Tesla moving. I do see a measured move from this huge engulfing, and as you can see, this area is now being held up, and the buyers are now trying to step in. So tomorrow, I'm gonna see what Tesla's gonna do. I do plan on probably taking calls in the beginning of the day, but we'll see how prices react the start of the market and pre-market. But this is all for today. I hope you guys enjoyed the video. If you guys can smash that like button and hit that subscribe button, that'd be greatly appreciated. As that is all for today. I hope you guys enjoyed the video. But happy trading. You guys have a good rest of your week. But until next time, I'm Audi 5000. Peace.